There's a dangerous assumption that I've seen lots of offshore people make. Many offshore Americans believe that moving abroad ends their U.S. tax obligation. That assumption is one of the most common and most dangerous mistakes that I see on a daily basis. This is because the United States does not tax based solely on the location of your physical residence. It also taxes based purely on citizenship. If you're a citizen, if you're a green card holder, or if you meet the substantial presence test, you're taxed on your worldwide income. It doesn't matter where you live, it doesn't matter where the income is earned, and the IRS enforces these policies aggressively. They're the law. I see expats getting caught off guard all the time here. Most expat tax problems do not begin with fraud. They begin with confusion. There's foreign wages, foreign business income, foreign bank accounts, foreign investments. Each of these come with a separate filing and reporting requirement. Missing just one required form or not reporting the income on an offshore asset can put you on the IRS's radar. And once certain patterns appear, audits and criminal tax investigations can follow. Worldwide income means everything you earn. Salary, anywhere in the world. Self-employment income, rental income, dividends, capital gains. As taxable income, it must be reported to the United States, even if you already reported and paid tax in the foreign country that you live in. This is where many expats first begin to feel overwhelmed. Sorry if I ruined your day. Double taxation is a real risk, but it's not unavoidable. U.S. Tax Code offers relief tools built right into law when they're used correctly. There's the foreign earned income exclusion. There's foreign tax credits. There's bilateral tax treaty. Each of these has strict rules. Each has limitations, and each must be applied strategically by someone who knows what they're doing. Mistakes here can often cost more than the tax involved itself. The FBAR and FATCA reporting requirements are hidden landmines. This is where many expats run into serious trouble. If the total value of your foreign financial accounts exceeds $10,000 at any point during the year, an FBAR filing is required, foreign bank account reporting. FATCA adds another layer with different thresholds and different penalty. These are just information returns. No tax may even be owed, but penalties can still apply, even with no taxes due. And I'm sorry, at this point in time, I didn't know it's not a defense. There's been too much publicity over this. In the past, many offshore issues went undetected. That era is simply over. Foreign banks now report directly to the IRS. There's also international information sharing agreements that continue to expand. Technology now fills in the gaps that once existed. What stayed hidden before no longer stays hidden. There's a risk of trying to deal with this without legal protection. Many expats first speak to an accountant. This can be risky. Accountants, they're good at preparing returns. They cannot provide attorney-client privilege. If mistakes involve foreign assets or potential criminal tax or offshore information reporting fraud exposure, the distinction between an accountant and attorney purely matters. Only a tax attorney can protect sensitive disclosures. Here's the advantage of hiring a dual-licensed tax attorney and CPA. At the tax law offices of David W. Clausing, we're both. We're dual-licensed tax attorneys and CPAs. That means accurate compliance coupled with legal protection all under one roof. We understand how the IRS audits expats, how criminal tax and offshore information reporting fraud investigations of expats escalate, and how to resolve issues long before they spiral out of control. If you've missed income tax filings, have unreported taxable offshore income, or incomplete or missing foreign information disclosure, there are still solutions that will get you back into compliance. We can remove the risk of criminal tax or information reporting fraud disclosure. We use voluntary disclosure, streamlined filing compliance procedures, delinquent information filing procedures, and others. But timing is critical. Once the IRS contacts you, many of these options simply disappear. Acting early can dramatically reduce the civil penalties that would otherwise apply, and avoid criminal tax and foreign information reporting fraud exposure altogether. International tax compliance is not do-it-yourself. Don't attempt this. International tax compliance is not intuitive. It's layered, it's technical, and it's unforgiving. Yeah, there's a mountain of internet advice out there, and generic software. You can create more problems than you solve here. This is not an area where guesswork is acceptable, and whatever you do, make sure you hire an experienced and properly trained international tax professional, not someone who's just claiming to know international tax. So in closing, If you live abroad, if you hold foreign assets, if you earn income offshore, you need clarity. You don't need assumptions. You don't need shortcuts. Dual licensed international tax attorneys and CPAs at the tax law offices of David W. Klossing are here to help. Call 800-681-1295 or visit klossingandassociates.com to schedule a reduced rate initial consultation today. Thank you very much.